Hey, welcome back, guys. I know I said I wouldn't do another video, but I need to do a video to address some of the most common comments that I'm getting. And I think they're really, really good, important points. So I think it's worth, another video. So stick with me. Again, I apologize for the room I'm in. There's a lot of echoing. It's a ton of reverberation. That sound quality is pretty poor. It's a Sunday, and I got kids and a wife, and they're all doing their own thing. So I kind of get pushed to this outside room, and it's full of glass. It's acoustically a terrible room, so forgive myself for that. And I'll get that disclaimer out of the way. This is not financial advice. I'm not a financial advisor. Nothing that I'm saying today has anything to do with advice. Make your own mind about what you're going to do and spend your money however you see fit. Okay, so let's get into it. I'm going to address a couple comments, and I'll get them out of the way right now so that you know what's coming up in the video. One is, how do I get into crypto? How do I get into Ethereum? I'm not going to necessarily spend too much time on like how do you physically do it, but how I, from a financial standpoint and strategic, budgetary side of things, got into crypto in what I consider 100% risk-free. I think this is probably the most important part of the video, so I might lead with that because I really want people to understand that side of things. It's a good way if you just want to get a little bit of money into something in a low-risk way, how you can do it kind of guilt-free. So another question is, when these hedge funds short the stock, where do they get the stock that they're shorting? Who do they borrow it from? And the answer is actually you. So we'll talk about this, ways you can prevent that from happening, and maybe ways you can get in on the cut, because if you don't make that distinction to your lender or to your broker, they get the cut for selling your stock to the hedge funds. We're going to talk about the whole entire decentralization of currency, whether it's Bitcoin, whether it's Nano, whether it's Ethereum, whether it's a government-controlled cryptocurrency, digital currency. We're going to talk about how I predict the next couple years are going to go, maybe even the next decade, and why it's really important using the tools that I'm going to talk about in my budgetary how to get into this, why I think it's really important that people put at least some money in it. So stick around if you find any of that stuff interesting. This will be a pretty good video, I hope. I think it's worth doing another video. These topics are interesting enough, at least to me. If you want to get back to the gardening stuff, skip these videos, that's fine. I'm going to do a playlist on finances so people can find these videos in an easy way. And, it's January, so there's not a whole lot of gardening I can do and filming I can do. I will get to those other videos shortly after this. There's just so much interesting stuff going on right now. I think it's worth discussing. So let's get to it. Okay, the number one thing I want to touch on right now, and I could probably do an hour-long video on this, so I'm going to try to keep this as short as I can. It's how I personally invest in high-risk things like cryptocurrency. Okay, so how I basically have lived my whole life, right from the day I got my first job, even before that in university, is I truly believe that the way that you get ahead in life is that you live significantly below your means for as long as possible. And the younger you are and the less dependent people on you that you have to do, you should take this to as an extreme level as possible. Even in the summertime where it's warm, live intentionally homeless, in a tent somewhere, in a van somewhere. It's pretty easy when you're just a single person to live in a van, almost no bills, move the van every day, or, get a tent and live in a public park somewhere way off the beaten trail where no one's even going to know you're there. I suggest that people, and even if you don't want to take it to that level of extreme, what I suggest is for wherever you are in your life, live below what you can potentially have. That means if you can have a $300,000 house, consider maybe just living in a $100,000 house. Pay that off as fast as possible. Get out of debt as fast as possible. And then when you do spend money, spend it in ways that is an investment to your future self. So that means, stuff like putting in a garden, stuff like planting fruit trees. These are some of the best investments you can make. Stuff like, if you're going to invest in something, solar panels is a pretty good way to do it, because not only do you get an ROI on your investment, you also limit and lower your bills in the meantime and make your cost of living smaller. You can buy small houses and renovate them while you live in them. You can renovate the basement, separate it off, get it all done properly with fire barriers and all that kind of stuff. And rent the basement out of the house that you're living. Make the tenants pay for your house that you're living in. You might be living in a worse house than you could, but at least, you're going to get ahead really, really fast. So this is how I believe people should live their life. And what happens is, if you live your life in this way, where you're living well below your means for as long as possible, what happens is your means rises significantly as time goes by. So that's enough of that. Let's talk about one next aspect of that. The best way for you to improve at something is to track it. This is probably the best advice that I can give you. If you want to lose weight, start not by changing your diet. Don't start by changing your exercise. Start by measuring yourself every single day and writing that number down on a piece of paper that you're accountable for. This one act of tracking the thing that you want to change will start changing it. And it's because you're going to watch that number, and every single day you're going to look at it. And just by the fact that you're now tracking it and monitoring it, you're going to make changes because you want to see the number go the way that you want. So for finances, you should run a budget. Whether that budget is in an Excel spreadsheet or you want to use some kind of software, I have tracked my financial budget in an Excel spreadsheet for ever since I've had a job. I personally will buy everything on a credit card, and I will pay it off once a week. I have a reminder that comes up every single Friday, and I pay off my credit card in full. But I want the information there so that I can download like a CSV file, and I can actually bin those into spendings like food, gas, electricity, all that kind of stuff. And I can monitor how much I'm spending compared to before. And just the idea is that tracking it alone has had me do things like, hey, we're spending more money in gasoline. Maybe now that I have 2 years, 8 years, 10 years worth of data on how much gasoline we're spending, now I have a really good database to make the decision on should I buy an electric vehicle and what the ROI on that is, because I know exactly how much I'm spending on gasoline. I can project into the future how much I would save on an EV, and then I could get an actual financial business decision towards doing that. I know that the EV will pay for itself in 6 years roughly, and any longer that it lasts than that, I actually have turned my vehicle into an appreciating income generating asset. So just tracking stuff and having that information is super valuable for your finances. Okay, next. Now that we're tracking every single thing that we're doing and what we're spending, we can identify areas where we can actually make cuts. Now, I firmly believe that pretty much anything outside of the necessities, and even to an extent those, you can cut anything outside of those 100% and you can survive for a month. So you have a cell phone. You could survive without it for a month. We've done it before. Some people need it for their jobs, and I get that. Cell phone's probably the worst example I could come up with. But there are things, if you're tracking this in your Excel spreadsheet, that you can identify that I could probably go without this for a month and just see what it's like. After that month, you can see how painful was my life living without that. What I've found going through that process with a lot of things is that I actually found my life quality got better not having that thing. A really good example, I know this is weird, is video games. I used to play a lot of video games. I used to spend money on video games. I decided to kind of cut them out of my life. And what I actually found was I enjoyed gardening more. I enjoyed it more. I enjoyed other things more. I enjoyed working out more. I enjoyed my life. It was better quality and I was saving money. So I may not have found that if I just kept doing what I normally do. Maybe you enjoy video games, but you maybe go out for dinner a lot, and maybe you cut that and you start cooking. Maybe you find that you have a passion for cooking. You won't do it, you won't know that until you actually force yourself to do that. So you can cut anything out of your life for a month and you probably won't physically die. So you can probably see if it's worth cutting out. That money that you save now can go into another tab on your Excel spreadsheet. This is a tab called risky investments. This is a tab called basically throw away money. Now, same thing if you are, say, going out to a hockey game and you thought it's a really good idea. Maybe you get all your buddies together and you go buy tickets and go watch the Leafs lose. Right? So instead of that, maybe you just all decide to buy a 2-4 of beer and maybe some maple syrup and have everybody over your house to watch the Leaf game. And now you take the money that you saved on that ticket, subtract the cost of the beer, the nachos, and the maple syrup, and now instead you basically put that into your gambling tab. And that, I'm saying gambling loosely. What I want to get across from this is that if you systematically go and do that, say you eat out at lunch and you spend $10 for lunch every single day at work. Now instead you start making your lunch. Instead of spending $10 a day, you're spending $1.50 a day. So every single day you are gaining $8.50. You count that up over the week and you throw that money into that tab. Now you can use that tab to service your debt, which is probably a really good way to go. But once you kind of get out of that, or you can take a portion of that to put into riskier things like cryptocurrency, like this GameStop thing. Okay, so it doesn't mean that you're going to be able to go out today and buy $2,000 worth of Ethereum or Bitcoin or GameStop shares. But what you're going to do is you're going to start saving up money so that in the future, when opportunities like this present themselves, you might have some money to do that with. And at the very least, if you take all that money and you crush down your mortgage and you make double payments on your mortgage that are fully taking out the principal, then you get out of the debt of the bank's hands in your pocket every step of the way. I think this is a really important thing, and it all begins at step 1, which is track what you want to improve. Okay, now I have to say something about this. If you're sitting there watching this and you're thinking, that's great, I can't even save $10 a week to put towards my mortgage. I can't cut anything out of my life and save $10. One of two things is happening. One is that you could be lying to yourself. And this is a defensive mechanism that we sometimes do to justify ourselves from not taking action. Chances are that is the case. So if you catch yourself, and sometimes we need to be told this, right? From people maybe that we like and respect. I hope no one gets mad at me for saying this. If you're in that situation, you might be lying to yourself. So please start tracking your finances and make sure that you're not lying to yourself. The second is if you are not lying to yourself and you track your finances and you literally cannot cut $10 out of your week to service your debt. The fact of the matter is, that is a very unfortunate thing, and I'm sorry that you're in the situation that you're in. You need to hear this. The fact of the matter is that you're living above your means. And if you continue on this path, it's going to destroy your life. So you have one option, and that is to take control and change something. So investigate and track your finances. Find out that one thing that you will change, because you must. If you do not change it, you will get destroyed. So you have to get back underneath your means, whether that is you sell your house and you live in a tent. It doesn't matter. You have to change something. So Take action today. If you're in that case where you are saying, I can't do any of this stuff, I physically can't, today is the day that you change your life, because you cannot stay on the course that you're on. It will destroy your life. Because I think it's really important people do this. Hopefully this is like, me paying you guys back for watching my channel, and this is like financially rewarding you and getting you free. Because I think us being free is how we fight the powers. Okay, so now that you've gotten out of debt to a decent amount where you can now start having some investments. If you ever have investments, I consider strongly that you structure them in the following way. The numbers are going to change based on your risk tolerance, but have bins nonetheless. You're going to have a bin for safe long-term investments. I personally, right now, with where I am in my life, I have this bin set at about 60%. So 60% of my investments are going to be done in safe ways. That means cryptocurrency is by default not that much. I have stuff like iClean is a share that I really like. It's an ETF based on clean technologies. It's performed really well. And it gives me exposure to like the stock market in terms of a wide breadth of clean technologies. So that way my investment is lining up with my ethics as well. I've invested before in stuff like just SPY, SQQ, or SPY and QQQ, which are basically, the top technology companies in the stock market. The next group you're going to have is the 30%. This is what I have. It's the medium risk. So I have that set at 30% right now. And in this area, you can have, things that aren't the, Walmarts and Disney and Google or, Tesla before it was, blown out of proportion, but just the larger, safer bet companies. Definitely not Tesla. Tesla would fall probably in the high risk category. But just, stuff like SPY, SPY, QQQ, things like that, those ETFs, there's going to be in the 60%, the low risk. This medium risk stuff would be more for, you can make predictions on where the world's going. You can say, 3D printing is probably going to be really, really big. Laser technology is probably going to be big. So maybe you buy something like Luxonics lasers. I've had positions in these people before that I have. Whether it's $100 or $1,000 or whatever, 90% of it is in, fairly safe bets. And that's because I got a family now, and I got to make sure that my kids can go to school. We're paying, towards an education retirement or education savings fund for them as well. So that's coming out before any of these as well. But I need to make sure, as the caretaker of my family, that my family is going to be okay in the future. So my risk tolerance is much lower than when I was, say, 20 and single. I might even have reverse numbers. 10% would be safe and medium, and I'd have 90% in what's coming up next. So the next and final bin is high risk, high reward stocks. You're not going to make a killing on having a GIC. You're not going to make a killing on something like SPY. Those are going to be probably decent performers, provided the whole world doesn't come crashing down, but you're not going to make really high returns. This last high risk play is where my cryptocurrency budgeting is. I have it set around between 5 and 10%. Right now it's at about 10%. And what happens is Bitcoin has exploded in the last while. I've been kind of writing about it for a long time. In fact, if you go to the cryptocurrency subreddit and you search by top posts of all time, you'll probably find Superdad, my Reddit name. I wrote one of the top pieces on there in the history of that subreddit, and it got voted up really high because it turns out that I basically predicted 2 straight years of where the market would go. So the cryptocurrency market. Right now, I would advise very strongly about being cautious about getting into Bitcoin. It could go up to $100,000. It could triple, and this Ethereum as well. It could go 10 times from here, but we are above, the logarithmic curve. We're kind of popping up above that which means I expect that there's going to be a correction somewhat in the next year or so. I don't know where it'll come down. I don't want people getting into this and then losing money and going like, in my comments, you owe me money, right? It's your money. You do whatever you want with it. But using my buying strategy of I was going to go out for dinner, I was going to spend $50 on that dinner. Now instead, I'm going to make some rice and chicken at home, and I'm going to spend $4 or whatever on that dinner. Rice and beans and some veggies. I'm going to spend like $1 on that dinner. I'm going to take $49 and I'm going to put it in my little basket. And then at the end of the week, I'm going to buy Bitcoin with it. That money was gone if you hadn't made that decision to sacrifice something in order to get it. So if that money goes and Bitcoin goes to zero, then the only thing you're out is the fact that you probably ate a healthier meal at home and you probably spent some more time with your family cooking it. So that's what you've lost, really, because that money was gone anyways. And instead of going to a restaurant, it went to a chance to create some kind of retirement savings fund. So that's how I invest in crypto. I've done that for years now, years and years and years and years. And that money, just dollar cost averaging my way in, at the end of the week, put a little bit into crypto that I would have spent going out to the bar and buying drinks with people. Instead, just had people over and we played board games instead, and we had a tea or we had beer. But we didn't spend $150 at the bar. We spent $10. So $140, free Bitcoin. If it goes to zero, I don't have to feel bad that I risked my family's future on a volatile asset. I don't feel like a gambler. And what ended up happening is, obviously it went the other way. So that got turned, for example, into a large ecosystem pond. It got turned into thousands of fruit trees. And it got turned into a business where, I make videos now showing people my gardens. So good things can happen when you start tracking the thing that you want to improve, and then also living below your means for as long as possible. It just so turns out that your means slowly increase. And then also, if you want to get into risky stuff, earn that money first. Do it by saving money. Do it by starting a garden. Track how much food you spend in a year. Start a garden. Compare that to how much food you spent in the year that you had the garden. All that money that you just saved by doing the work of gardening and cooking, that's all free money that you can invest. I recommend you crush your debt down first, but you can take a portion of it and play with it. And you can do that guilt-free. Okay, so that's long enough on this. Let's go to the next topic. Okay, I had a couple comments on where do these people who are shorting GameStop, these hedge funds, where do they get the stock from? And this is actually a really, really important question, because what people will do is they'll open a Fidelity account or a Robinhood account or whatever, and they'll buy stock, and they'll just hold the stock in their account, and that's it. They won't do anything else about it. This is similar to going to a bank and depositing your paycheck. Okay, so what the bank does now when you've done that is their asset side of their balance sheet went up. So that means their debt side can go up higher. They take your money immediately and they lend it out to somebody. And they are charging, a fee for lending. So they're taking your money and they're making money off of it. This is exactly what somewhere like Robinhood, and there's nothing illegal about this. This is what they do. They take your stock and now they can play with your stock. So what they do is when someone wants to short a stock through Robinhood, it's your stock that is being sent to the hedge fund to short against. So they give your stock to the hedge fund sells your stock, and then they have to then repay the stock. Okay, now the interesting thing about that is Robinhood, there's a lending fee for lending that stock out. It's your stock. You should probably get that fee, right? Well, you don't. Robinhood gets that fee. So the lending institution that's lending that stock out gets the fee. Okay, so how can you go about that? It's as simple as giving them a call and telling them that if you want to lend my stock out, you can, but I want a cut of the fee, right? And it's appropriate that they get a cut because they're the one interfacing with the shorter, right? You're not going to call up the CEO of Melvin Capital and negotiate a fee for lending your stock to short, right? So they're doing all that back work on the back end. So it's appropriate that they get some of it, but you can request that you get some of that fee. So make sure you do it. The second way that you can prevent that is if a stock has a standing limit order against it, it can't be lent out. What that means is if you buy GameStop shares for $300 on Monday and you immediately put a sell order in at $100 or at $1,000, for example, that sell order, it's called a limit order, will actually lock your stocks so that they can't lend it out. Now, the whole reason they got into this trouble with overshorting the market is because institutional or retail investors, the average person, went and bought a whole bunch of GameStop shares. And Robinhood went, hey, I got a bunch of shares to the hedge funds, and they shorted them. So they took your shares and shorted them. And what happened then, obviously, is people went and bought more shares. So they bought more shares and they're in the account, and then Robinhood said, hey, there's more shares in here, and they shorted them. And that just kept happening. That cycle kept happening. So that's where they're getting the shares to short from. Who's making the money on that is actually the lender, not the owner of the stock. You can change that again, give them a call. Depending on your terms of service, you may or may not be able to change it. And the other way you can lock your stocks up is to basically move it to someone who doesn't allow that. It's pretty rare that you can find something like that. Maybe someone more knowledgeable than me knows which ones of those are like that. But if you have shares in an investment trader and you don't have a limit order to lock them into the market, because if that limit order hits, they need to sell, like they need to exchange those shares. So they have to be available. They need to be there. They can't then go, ask Melvin Capital, hey, can you close your short position? Because, we actually had some shares, we lent them out to you, and now we got to pay them back. And it'd be really nice if you could close your short position, right? Because Melvin Capital just say, screw you, I'm going to do what I want. Okay, so if you put a limit order against your shares, then you lock them in. And then now places like Robinhood can't use your shares and lend them out to the company who shorted them. Okay, and another side of the business that they're doing is that they sell your information. So Robinhood, for example, has no trading fees. This is kind of the way that they can get more people in. And it's why a lot of young people are getting into investing. Here's the quick tip for you. If there's no product, you are the product. So what Robinhood does is they take the information on their trade book and they actually sell that to the broker. So in this way, and this is where things get, kind of, I think, shady, because Robinhood is selling the data of the net worth or the investment size of the order book to the hedge funds. And they're basically selling their customers out to the hedge funds. So the hedge funds see all these tiny little investors who are, have $50 investments in, and the hedge funds just get this all as a big pool of data. And they say, okay, all these little tiny baby fish are in here trying to swim with the sharks. So we're going to take that whole, we know how much that is. And we know that these people only have $500 or $50 or $10 in this. We know that they're small fries. So we're just going to take massive short positions against them. And this is how the hedge funds got themselves stuck. And this is why I don't have any sympathy for them, is because they saw an opportunity. First off, they got into this by trying to destroy a company during COVID. They had a company who was struggling at COVID, and they decided that they could make a pretty penny off of absolutely destroying them. So they're the most predatory of the predators. They're disgusting, slimy, bottom of the barrel people. They also buy the data from places like Robinhood. And see these little everyday investors getting in this, and they short the crap out of them because they think, these people can't fund more money to keep this going. And what they got wrong is that this caught on like wildfire and went viral. And those, 100 million or say 10 million people that they were trying to short and destroy, all these average Joes and Janes that they're trying to destroy, they got joined by the rest of the planet, and we're all fighting them now. So that's what they screwed up. But they didn't hesitate for a second to notice that the small person is getting in there and investing, and they were going to try to absolutely destroy the small person by shorting the crap out of that. That's why the stock is shorted to 140%, is because they took such a large gamble, because they just have such that mighty fist that they're just going to squish the average Joe. And that's why it's beautiful that it's being turned against them. But this is what Robinhood does. And remember, if there's no product, you are the product. So Robinhood sells your information on your trades. So if you have a limit order, for example, say you buy a GameStop share for $300, and you want to be safe, so you want to put a sell order in. If it hits 260, sell it. Just in case it falls to the floor, you'll at least get 260 for it. That information is being sent to the hedge funds, and they have it. So they can see all the stop limit orders are for all of this stuff. And then when they, close out the buying side and they only allow selling, if you still have that stop order in, they know that they can push down there and trigger that sale. And that sale drops the price even further. So this is how they use your information against themselves. And this is, kind of how they play their dirty tricks. It's just another day on Wall Street. And again, the reason why this is working is because they're stuck, because they overshorted too much and their hand is literally stuck in that candy jar and they can't get it out. The only way for them to get it out is to actually literally buy, more shares than exist. So, the longer this goes, they can kind of flip it a couple times, and the last people out might get hurt. For sure. That's why I warn you're going to potentially lose everything you put into this. But the thing is they have to buy so many shares that right now the power is absolutely in the holder's hands. And the longer everybody holds together, they're screwed. And screwing these guys, to me, is like poetic justice. It's as good as it gets, because not only were they trying to destroy a company that was struggling during COVID, and a company that is, arguably helping people's mental health by giving them entertainment and selling them entertainment devices during COVID. So they're trying to crush and destroy those people, make a penny off them. They were also trying to crush the actual average person who's struggling right now by seeing that these retail investors are investing in this thing, and they were going to crush them. So thanks for watching. Hope you enjoyed this video, and I'll see you on the next one.